What's up guys, Bowie here, back at it again with another weekly trading reflection, week 8. I'm going to be sharing all my losses, all my wins, going to break it down for you step by step so we can all learn together. And I'm going to say already, this was my first week trading live, as some of you guys know, and this was by far one of the most intense and emotional weeks of my trading journey so far. Just because once I saw those numbers and realized that you can potentially withdraw this to your bank account, it just got to my head and I just started over trading, and this was a terrible week. If we talking about good habits, maybe it was a profitable week. Yes, I ended up being in profit, but that's not the most important thing for me. The most important thing for me to focus on right now is building those good habits, taking confident trades and not focusing on those profits, because that's not important. You can make profits anywhere, but once you really master this skill, it's over. So I'm really gonna focus on taking those confident setups and just not chasing the markets, only taking good opportunities once I see it's a valid one and once I have enough structure to validate my setup. And so yeah, let's just get right into it. So the first trade was this one. Basically I was the liquidity. Yes, I was a liquidity. So this was actually a great analysis. So my bias was correct, but my stop loss was just right at the manipulation. So on the higher time frame, you see that this fair value gap is getting respected. We are in a bullish order flow. I don't want to short anything, just running the trend. So what happens right here? We sweep the low, right? We sweep the low. We make some break of structure. Just let's take some longs, right? What I saw is, I also explained this in my quarterly theory video, but let's just go over it right now quickly. On the minute 5 time frame, we saw this sell side liquidity. Let's see it right here, sell side liquidity. This is in a discount. Let's take the low to the high. This is the low, right? You only want a long in this golden zone. We have this liquidity right here. Why is this important liquidity? Not just because this is a low, but because this is in the discount and because under it there's also a fair value gap right here. And yeah, this is also basically demand zone, right? So this is a nice area for longs. So what did we see? We get a dip into it. We basically just sweep some lows, manipulation, get a break of structure right here. This is the first entry, but I don't take this because it's a little bit risky. But once I saw this getting respected, this retracement and then the next expansion, then I was looking for longs because this was the original consolidation. We were bullish, so this was my target, but I got stopped out because I literally placed my stop loss just once I saw these bullish candles. I thought we were going to the moon and we're going to take out these targets right away, but you need to wait for that manipulation. That's what I didn't do. So basically this low is not a good low to put my stop loss at. This was a better low because this is just a fair value gap fill. This shouldn't get here again, but this is a low that can be used for manipulation before the next expansion, and that's exactly what happened. And I just was liquidity, right? So a good trade analysis, but just a bad entry, bad execution. The next trade was this one. I don't even know. I'm gonna be honest with you, I don't even know why I took this trade. I think it was because I got stopped out on Euro USD, and right at that time we swept also some equal highs right here. Yeah, these were triple equal highs, and it got swept right at when I got stopped out, and I thought, okay, we're just gonna reverse. We disrespected this fair value gap. Actually not, and so I went short. So I can't even explain what did I write here. Really bad setup. This was an emotional revenge trade, so I actually didn't do a proper analysis on GBP USD. Because we were actually very bullish. I don't know why I shorted this. So yeah, emotional revenge trade. Let's go to the next one. So the next trade was actually the first trade after I got stopped out, because the trade bias was still valid. Like I said, the analysis was great. My entry, my execution was bad. So after I noticed this, I just re-entered. It's not a revenge trade. It's literally just valid because the bias is still valid, right? So what did I do is I entered right here after seeing this manipulation and still targeted this consolidation. So this was a nice trade, but again, poor execution. I see everything in hindsight, but I can't see it once I actually need to, right? So that's something I need to work on, especially the execution, because the better trade should be to see this sweep, this bullish candle close, and then enter, market enter right here for a beautiful 4.36R. So these are really the trades I want to take. Beautiful entry, actually. The bias is bullish. We want to target this consolidation. We enter this point of interest. We take out this liquidity. We are in the discount. We're ready to go up again in the bias. And so after seeing this This is called actually the failure of displacement. We don't go below this. We basically sweep it and we close a candle above it. So this is a nice entry model. I put my stop loss at this sweep and then market enter right here. Beautiful trade. So yeah, I actually took this trade, FOMO'd in after I saw everything. But yeah, this was actually the better trade. But still a win. Yes, so of course we just learned from those small mistakes. Then the next trade was a loss on GBP USD. Basically, I FOMO'd in once I saw that we were entering this discount zone of this push, and we basically tapped into this minute 5 fair value gap, and then we displaced right up. So this was actually FOMO entry, not a good setup. Let's see what I wrote down right here. Rushed, hungry trade. Did not wait for the minute 15 close after the minute 5 displacement. So again, this was a minute 5 bullish candle, but this was just a retracement and I FOMO'd in way too early. And actually what happened is, look at this. This was actually just a wick to fill this fair value gap to go lower again. So this was not a bad trade in the overall bias, but just again, poor execution. So what happened right afterwards, I took a win because I noticed my mistakes. I saw that this fair value gap mitigation is getting swept another time, and this is where I got really bullish, because if we really want to go lower, then we should respect this fair value gap right here. So because we respect this point of interest, I want to see this fair value gap getting ran through, right? I want to see candles just disrespecting this fair value gap. And first of all, we saw that this is getting respected because the wicks, the candles don't close above this fair value gap, right? But once I saw this order block getting formed, why this is an order block? Because like we have a downwards candle and then a big push. Once I saw this, I was getting really bullish because this candle closed above the fair value gap, right? This is the fair value gap, right? And so we closed above it right here, formed an order block. We are bullish on the higher time frame, respected this point of interest, just targeting the confident next swing highs, and this was a beautiful trade, right? Again, recognizing my mistakes, not waiting for a minute 15 close right here, but here it was just a nice entry model, waiting for that fair value gap to getting disrespected. After seeing this good structure, and yeah, nice trade. Not taking these trades, don't do this, guys. It doesn't make sense. Just target those confident setups which you know will get hit, and this is how you will get consistent with it and actually pay yourself as the market makes money available to you. So the next trade was a loss on Euro USD. For this, I actually only use the quarterly theory to validate my bias, right? So if we take on the quarterly theory indicator, day quarterly theory, and we basically go back to this time right here, what we see actually is this is London session, this is the quarter 1, this is quarter 2, quarter 3, quarter 4. And so what I saw here is that the first quarter is basically just a trend continuation, right? Lower lows, lower highs, and this was just a trend continuation. This is basically an accumulation, I thought, and then this is the manipulation. This is a clear manipulation because we sweep those highs, and then I expected the last one to be a distribution, right? So this was actually just formed based on the quarterly theory, but also of course we made a big push the previous day because of CPI, I think, and I was just expecting a pullback this day. So yeah, what happened basically, let's play price further, was a nice beginning. I should have put my stop loss to break even. I didn't do it because I was confident, but basically not a good trade because also we had PPI news coming up. So I don't really think that news can mess up with price action, but I do think that if news is there, there is a high probability of just some more manipulation before going towards the buy. So that's why it's risky, I think. So I don't think these Asia highs, I think this was Asia high, would get taken out if there was not PPI news, right? Because actually my bias was pretty good. So this was actually a good trade, but traded just before news, also not good. I should know that my stop loss is in danger if there's news, but the bias still remains the same, right? Then afterwards, let's just remove this replay mode. And basically after this, it was just getting through my head. I made a loss on my live 50k Funnet account, and I thought it was over. Like, no, I'm in a loss. Like, this is where I worked so hard towards it, and now I'm in a loss. So I started overtrading. Yes, I started overtrading. I know it's so bad. It's such a bad habit. This is not what my focus should be on just revenge trading and making that money back. No, my focus should be, again, like I said, on maintaining those good habits. Actually, I said to myself, only lose 1% max a day and then quit, but I didn't do it. I think I lost like 5% in a day, and I was already down 1% from the previous day. And so yeah, I started over trading, but then I over risk on the one trade, which was actually a very, very good trade, but I'm not proud of it because I just over risked on this. So why I took this trade is basically, if we look on the higher time frame, we were bullish because of CPI, right? On the daily, we were very, very bullish, not trying to take any shorts. So we formed a range right here. Often after CPI, we see like a consolidation, of course, to just rebalance. And what we see right here is we sweep the range low right here. So I'm just expecting for the week to close bullish, right? Because we started bullish. I'm expecting to just make that big push, which happened right here, right? This just looks that we were going to take out this high next week. Of course, you don't want to short this. So what I saw is this basically as an reaccumulation of a market maker buy model. So this was basically the sell side of the curve, and this is the buy side of the curve. So what happened here is this right here. You see this, we sweep this range low, and immediately we get a push up, and this is telling me that this is the pivot point, this is the key level before we're gonna start this side of the curve. You need to do the opposite of what the most people are doing, and the most people, they see this as bearish, and they see this fair value gap, and I don't know, maybe a supply zone, and they think, oh, we consolidate here, we sweep some highs, we're gonna go down, right? We're in the premium, but they don't know the high time frame bias. They don't know where we're actually going to. And so this daily is so important. The daily, like the high time frame, is just telling bullish. Why do you want to short this? And so after seeing this market maker buy model, and we see the sweep of this range low, this is looking so bullish, and a lot of people got trapped into shorts. So let's just play price right here. I think I also used the quarterly theory for this. Great confluence. Let's look at what I saw. So let's mark out those 90 minutes cycles. This is the first quarter, second quarter, third quarter, fourth quarter. Right, so what happens right here? I will go to the minute 5 time frame. So usually the second and third quarter are like the manipulation and distribution. So what I saw here is that let's play price further. We got the sweep of this low right here, and so I thought that this was the manipulation. So this should be like a reversal. This is like an accumulation. This is the manipulation, and I expect the distribution, right? So we have the quarterly theory confluence. We have the market maker buy model confluence. We have like the daily bias confluence. Once I saw this fair value gap getting disrespected with this bullish candle, and again, like the first trade, I think the second trade, we also saw like an order block, right? Once I saw this wick into it, and then we close higher, this is just indicating to me that this is possibly an order block, and we disrespected this fair value gap. We swept this low. We are bullish. We are expecting the next impulse to finish this market maker buy model. So I entered right there and target on the big external high of this trend, and so it played out perfectly. Over risked on this. I got really lucky. I should really humble myself, even though this was actually a very good setup, but I just over risk, and you can't over risk. Even if it's a good setup, you always have to know that there's chance that this won't play out. So the most important things from this week is really working on that execution, because I think my analysis is becoming really great, but the execution is just poor. And I think over the next couple of weeks, I will really trying to master this. The most important thing I realized also this week is that conviction in your model is key. If you don't trust your system, like why would you trade it? You have backtested it. Trusting your analysis is the most important thing, and you should only focus on putting a bias on closed candles and not on candles that are forming. So yeah, I feel like I'm just trying to learn so much, right? I'm deep diving into quarterly theory. I learned about true opens, about midnight open, about all these extra ICT confluences, which I actually don't really need, but I just like to understand everything. Like, I'm that kind of person that just wants to know everything, and actually that's not that good for trading. I think it's good to just know everything and then scale down and form your strategy, cut some things out. So I think that's what I'm gonna do. I think I'm not gonna put any more information in my brain because I think I have everything to become profitable, but I should just focus on my own system, not trying to add anything more. I think this is enough. The quarterly theory is the last confluence I'm gonna add. And so yeah, now it's the time to prove myself. I'm back at break even on my live account, focusing on 0.5% risk per trade. I'm really gonna focus on that psychology that I don't fuck up another time, working on my execution, building my conviction in my trading system, not trying to add anything more. So I'm ready for tomorrow to take on the markets. I hope you had any value from this video. If so, I would really appreciate a like and subscribe. It's free and it will really help me out. Join my Discord via the link in the description because I think I'm gonna be doing a giveaway, so you don't want to miss that out, right? So free, fun at accounts, that's always nice. So I hope you have an amazing rest of your Sunday, and I'll catch you guys next week. Peace out.